Great. So wonderful. So with this, we are now coming to absolutely the last session, but truly, truly a very important session because what does it take to get ourselves working capital financing and various other, access to finances for our business, for running our day-to-day business has been covered so far. The important aspect now that we are coming to is about capital markets. And if people thought that, oh, that's a dream for only the big companies, then not really. That's the reason why we've brought this special edition of this session to you. And in order to move to the session, I now take the opportunity and to introduce and welcome Ms. Rachna Busari. She is the Vice President of National Stock Exchange of India, which is currently ranked the world's second largest exchange in cash market trades. She's responsible for the All India Business Development Initiatives of NSE for listing of corporates on the bourse. She's a postgraduate in financial management and commerce and law graduate with nearly 20 years of experience working with NSE. In her roles, she has handled functions like listing, investigation, member supervision, clearing corporation operation. She's also the vice chairperson of the World Federation of Exchanges for the SME Working Group. It's our complete pleasure to have her with us today. And Ms. Rachna, it's our special thanks. We truly appreciate that you're down with a bad throat, and despite all of that, you are taking out time to say hi to the participants and guide them in the format that you can. Thank you so much. Welcome.
Good afternoon, Shalini, and thanks a lot. Thanks a lot for introducing me, and thank you, audiences. I must say, thank you a lot for even bearing with my bad throat today. And yeah, so I heard Ketan speak at the last moment, and I also heard some questions. So that shows the kind of enthusiasm and the interest that the audiences have envisaged on the topics chosen by the India SME Accelerator Network. So compliments to you, Shalini, and your team for selecting a wonderful array of topics and for getting us as speakers on the platform. Yeah, so I think the tone has been set aptly by Shalini that yes, when it comes to capital markets, most of the corporates envisage a scenario that, they have to be a large corporate, they have to be beyond a particular size to be able to tap equity markets and raise funds. However, that is not the scenario in reality. Since 2012, SEBI came up with a framework which allowed small and medium enterprises to actually tap the financial markets and raise funds through the capital markets. So, in simple language, if I have to say, it is like an SME company can come up with an IPO and raise funds and have investors attached to them who will participate in the funding round that has been taken by the company. So what does this mean? This means that an SME company, apart from the traditional channels of funding their businesses, the banking channels, the NBFC channels, their own funds, also have an alternate funding mechanism, which is the NSE SME platform, which we call as the Emerge platform. So my colleague Jayesh, who's also on this session, will take you through the entire eligibilities and what all is applicable, how it benefits the SMEs. Pardon my throat, I will not be able to do that, but he will run you through the whole session. But just to give you a brief about what this platform is and to quote how successful this has been, I'll just throw some numbers at you, is that we have more than 200 corporates which have raised funds through using this platform. And these corporates have used I think they have raised more than 3,200 crores of funds. So that's a huge amount of funding. On an average, a company would have funded around 15 crores. So, if you look at the number, 15 crores is a good amount for an SME company for an infusion of funds to take their businesses to the next level. So it's a very, very important factor to notice that a 5 crore and a 10 crore fund doesn't budge a balance sheet of a larger corporate, but this kind of fund infusion into a smaller company just turns around them, and they're able to grow not just once or twice, they're able to grow 10 times at least by this kind of capital infusion. And we've seen that growth happen on our platform. Our companies, which got listed on the NSE Emerge platform, have migrated to the main board. So more than 50 corporates have migrated to the main board. That's again a unique feature that is offered by our SME platform, that you can migrate to the main board. So in a way, if I have to say it very simply, you can enter the Emerge platform with easier entry norms, be on the platform for a period of 2 years, show your growth in the capital markets, learn the dynamics of the capital market, learn to place yourself in a regulated environment, and then you migrate to the main board where the larger corporates are trading, and all the large investors are eyeing that pie of corporates on the main board. And that is where your actual liquidity will come in, and that is where your actual share trading will happen. So it's a very great I would say it's a very great initiative by SEBI, and a very thoughtful process by SEBI, that the corporates are not only able to tap funds at early stages of their life cycle, they're able to get used to, accustomed to the regulatory framework by lesser compliances. They're able to break the myths that surround the promoters around the capital markets about, that no, this is for larger corporates, I am not able to do this. So, this segment, this Emerge platform allows you to overcome all these barriers and gradually move to the larger boss, where you're able to benefit in totality all the benefits that are available in a capital market. So the session down that my colleague will conduct will help you understand that what it requires for corporates to come onto this platform, how this platform is going to be benefiting them, and what is the, apprehensions that surround the promoter while they take a leap onto this platform. And also some of the truths, that people feel that capital markets is not a right way to approach funds, that also will be handled by Jayesh in the session down below. And I only have to conclude by saying that it's a wonderful platform that has been set up, and overall between both the exchanges, 500 companies have taken this platform as their preferred choice of fundraising, allows them to raise multiple rounds of funding, and makes a space for them in the capital markets, pave their way into the capital markets and go to the larger growth. So that's it from my side, Shalini, and over to you and Jayesh for a detailed session.
Thank you very much, Rachna. Very kind of you to manage to talk so much, but what you said in this short span has been absolutely insightful, to say that, it's not too far a dream, it's something that's absolutely gettable. The value of 15 crore that you put out on the table is huge. It's huge for a whole lot of SMEs out there. And, that kind of money to be garnered from a platform of this kind, with easiest way of getting in. Through Emerge, as, let's say, an incubation period that they can be for 2 years, is wonderful. And I'm sure they are intrigued now to learn more about it and understand more from Jayesh. Thank you, Rachna.
Thanks.
Over to you, Jayesh.
Thanks to all the audiences as well. Thank you so much.
Thank you. Jayesh, I hope you're able to display the screen. There seems to be a little bit of a technical hitch. Please stay patient with us. We will soon have Jayesh coming back with us on screen. I think they just got disconnected for a brief while. They will be back to tell us a little more about what enterprises should be doing to go on this dream journey of listing themselves at the stock exchange, even at the level of emerge to begin with. Let's stay tuned for it. So, participants, in the meanwhile, I'd like to draw your attention back to the upcoming Business Accelerator program. What are we going to be doing on this one? It's completely focusing on business growth revival. So, which is essentially looking at where do we go from here that we are at the end of the tunnel of COVID-19. Various aspects of your business would be covered in terms of the challenges that you face both at the strategy level and at execution level. So participant cohort size is about 35 SMEs who will get to be a part of this program. So please enlist yourself by registering so that you can go through the process to know more.
Hello. Hello.
Yeah, welcome, Jayesh.
Yeah, hi, Shalini.
Hi. I'm glad we have crossed the bridge of
Yes.
the technical glitch that we had, and we have you back on track.
Yes.
I hope you now have the right to display your screen.
Yeah, I'm just sharing my screen. So yeah, are you able to see the screen?
That's right, we can.
Yeah, okay. So I guess Rachna has already set the contents for the eMerge platform. And first of all, thanks a lot for letting us in at the last moment. And like Rachna couldn't take the session ahead, so I've just joined in. So just starting with the session, taking it further, like Rachna has already told, we have launched the SME platform in 2012. It's the platform which has been regulated by SEBI and is the separate segment on the NSE platform. So what we have done in the 2008 finance minister spoke about why not to allow the small and medium companies to raise equity capital from the market. So we have after the budget speech came into the knowledge, then we started working on the criterias and the way outs how we can give the access to the small and medium companies to access the equity capital market, so that even the growth stories are part of the equity capital market now. So we came across many stories where we hear about if somebody has invested in Reliance maybe 30 years back, he must have made the net worth of so and so. But we wanted the same facility to be given to the investor community, plus the SMEs to reach out to this investor by giving equity to them. So in 2010, we have got the permission to launch the SME platform, and in 2012, we came with the final guidelines and launched the SME platform. The beauty of this platform is it's the same platform, means the trading system, the trading system, and everybody, investor community are the same across. So the investor who is trading in the Reliance or Wipro or any main board companies can invest or trade in the SME platform also. So just to give you the facts and figures about the platform, Total number of companies till date listed is 214. So put together across the exchanges, around 500 companies have been, around 550 companies have been listed. On NSE, the total capital raised by these SMEs are 3,261 crores. And currently the market cap of these companies is around more than 14,500 crores. So typically we have seen the average size of 15 crores, which we came across SMEs. Plus we are open to any sector which they are coming from. But we are a little bit hesitant on taking NBFCs from or the broking community and etc. So basically, we want the manufacturing company or the IT service companies to access this market and show the growth story. And total number of companies migrated to the main board is 64. So this part I will be covering in my future slide. So how we have placed this SME Emerge platform. So once the entrepreneurs start with the business, either it has been taken from the grandfathers or the father and the entrepreneur is taking ahead, or he might have started up his own business with his own capital, or he must have borrowed from friends and family. Because in the initial level, it's very difficult to take the bank financing. Once the entrepreneur has taken, has performed, has shown the performance in the market, have shown the performance in the business growth, then they usually go to the bank to finance the business. But obvious, if the entrepreneur has already shown the business growth, the banks are interested to lend the money. 1 second. Yeah, the banks are interested to the banks are interested to lend them the money with provided they are giving the collaterals to them. So entrepreneurs takes more and more money from the bank funding and then reinvest it in the business and grow the business. Once all the collaterals has been used and there has been the stage where now entrepreneur can't take more and more debt financing because he needs to maintain the debt equity ratio also, and more borrowings mean more interest you need to be paid. You need to pay. So entrepreneur has walked through the angel funding or the venture capital funding or the private funding from the market. But again, all the private equity deals or the angel funding doesn't happen in every kind of businesses. So before 2012, they have had the opportunity to go and bring the IPO. So if the company has been really large, and if they are fulfilling the criteria of the main board platform, then only they can bring up the IPO on the main board. But after 2012, we have given them the opportunity to bring the small IPO, whatever funding, whatever investment they required from the to put it in the business, like in the initial level of 1 year or 2 year or 3 year, they are seeing that my overall project cost might be around 50 crores or 100 crores. But in the initial 1 year, 2 year, 3 years, they require 10 crore or 15 crore or 5 crore of funding. Then they should have tapped the Emerge platform. Once they have listed, raised capital and listed on the Emerge platform, then they can migrate to the main board platform with either further rounds of capital, further raising of capital from the market through QIP placement or private placement, or bringing the right issue or further IPO of the company. There are various means and channels from where he can get money from the stock market. So we in the recent past, we are hearing from MSME minister that there has been change in the definition of MSMEs. But SEBI, our regulators have kept it very simple. They have not associated this MSMEs definition to the capital market. What they have said is any company whose post-issue paid up capital is less than 25 crore can access this equity capital market. So just to bifurcate this thing into 3 criteria, what they have told, if the paid up capital is less than 25 crore, you can access, and more than 10 crores. So it's between 10 to 25 crore, then the company has a choice either to go on the SME platform or go on the main board platform. If they are fulfilling the criteria of the main board platform, they can access, they can bring up the IPO over there. But if the post-issue paid-up capital is less than 10 crores, then mandatory they have to become on the SME platform only. But if the paid-up capital, post-issue paid-up capital is going beyond 25 crore, then only they can have access to the, then they don't have the access to the SME platform. Only they have access to the main board platform. Shalini, I'm sure I'm audible.
Totally.
Yeah.
And
yeah. And putting further criteria on the SEBI eligibility criteria, NSE has come out with the eligibility criteria where they have said, at least we want the companies who have shown some, have some operational history. So it should not be today I have some idea, I want to run the business and I'm coming to the exchange. So what we have done, we have told we want the operational history or the track record of the company for at least 3 years, with the operational profit for at least 2 years out of 3 financial year. So before this pandemic situation, what we said, we only want the operational profit for at least 2 years in the preceding year in which you are filing the application. But due to this all the pandemic situation, we have relaxed the definition eligibility criteria and said operational profit for at least 2 years out of this 3 financial year. And operational profit needs to be taken earning before interest, depreciation, and tax. And there should be a positive net worth for the company. So once the company fulfills the eligibility criteria, these are basic regulatory norms which has been introduced by the regulator. So when the company is coming out with the IPO on the eMERGE platform, minimum 50 allottees must have applied in the IPO. The DRHP formats remains the same. That means the ICDR guidelines which are applicable on the main board platform are applicable on the SME platform also. But of course, there have been various exemption given to the SME companies. So here what SEBI has told you, you need to take the permission from the exchanges to bring up the IPO. But on the main board platform, you need to take permission from the exchange and the regulators also. So here they have given the relaxation key, only exchange can issue the observation and give the in principle approval to bring the IPO. And once NSE or the exchange give the in principle approval, usually it is valid for 1 year. So within 1 year of time, you can come up with the IPO anytime. The dilution requirement, that is the post-issue public shareholding, remains the same across all the board. Whether it is the main board platform or the SME platform, at least 25% needs to be offered to the public. There is no such grading requirement, but we have seen in the initial days when the SME companies were bringing out the IPO. So maybe the QIB or the market investor who wants to invest in the company are telling to do the grading, voluntary grading. So it adds on the investor confidence in the company. What SEBI has done, like on the main board platform, when the company brings up the IPO and it is not subscribed, I guess minimum to 70 or 80%, then the company has been given the option to withdraw the offer. But on the SME platform, SEBI has told once the IPO gets open, whether it is undersubscribed or not, it should be 100% underwritten. So suppose the IPO has been subscribed by 70% or 80%, that's the underwriter to the issue, which will put in the remaining portion and subscribe the IPO. Here, SEBI has also introduced the market making for 3 years. So in the last point, as you can see, here SEBI has come out to introduce that minimum application size will be 1 lakh rupees and minimum trading lot in the secondary market would be 1 lakh rupees. So what we see usually see is on the main board platform, when any investor wants to invest in the main board companies, they can buy 1 share, 10 share, 100,000 or according to their appetite. But on the SME platform, what they have told, we want the informed investor who can understand the business, what has been run by the entrepreneur and have the risk appetite. So they wanted to keep away the small investor. They want market investor and the informed investor to invest in the company. So they have kept the value of 1 lakh rupees, and it has been tradable in the lot size. So just to give you the example, if the company is planning to bring IPO at 50 rupees, so they've predefined the price band with a certain level and the lot size against them. So suppose anybody coming out with the IPO at 50 rupees, the 3000 would be a lot size. If anybody coming with the IPO between 18 to 24 rupees, 8,000 will be, sorry, 6,000 will be a lot size. So a regulator have defined the particular price band, and against what price band, what will be the lot size. Further, they have given the power to the exchange to relook at the lot sizes. So suppose this 50 rupees has become 100 in the future time. So the exchange has been given power to reduce the lot size from 3000 to 1500 or 1000 or whatever. But this minimum reduction should not go below 1 lakh rupees. That needs to be taken care by the exchange. So like they have told the minimum investment and the lot size will be of 1 lakh rupee. So they have come up with the introduction of market making for at least mandatory market making for at least 3 years. So just to give you the highlights about the market making, any registered broker of the exchange can become a market maker. And how they have defined the role of this market maker is they need to be present in the market for 75% of the time with the buy and sell code. So the basic understanding what we have is because of the investment of 1 lakh rupees, we don't see regular volumes in this stock. And even who is investing this 1 lakh rupees will give certain time to the company for the performance and then exit from the company or stay with the company, whatever the investor have their choice. So if the investor wants to sell that stock, there should be somebody who can buy it. And if the investor wants to buy, he sees the company is performing very well on the business side and it's worth to invest in the company. So there should be some investor who is ready to sell in the market. So they have introduced the concept of market making, and they have told the market maker, for whoever company you are becoming a market maker, you need to subscribe at least 5% of the IPO size mandatory. That's the reservation made to the market maker, and it will be over and above the dilution of 25%. So total dilution is approx 26.5275%. On the post-listing compliance side, what SEBI has told like these are SMEs in companies and the minimum lot size introduced. So investor also aware about the risk appetite what they are carrying. So they don't want to burden them with all the listing compliances which are applicable to the main board company. So the basic exemption what they have given as on the audited financial accounts. So on the main board platform, we usually we see that quarterly audited accounts have been published in the newspaper, disseminate on the exchange website and the company's website. But to the SME companies, they have given the relaxation. Instead of quarterly, you need to do the half yearly audited accounts. And because of the lot size, we don't see n number of investor participating. So they don't want it. The cost of publication in the newspaper should be passed to the company. So what they have told, you need to publish it on their website and disseminate the information on the exchange website. And they can mail it across to all the investors. So that's the relaxation given. Rest, all the corporate governance norm with respect to the secretarial audit or the shareholding submission of shareholding pattern remains the same across both the platform. So here they have introduced one beauty of migration, that the companies who are coming on the SME platform can migrate on the main board. So majorly what we have done here to identify the SMEs and the main board company, we add to the series. The series is available with the broker community. So usually on the main board platform, the series runs like EQ series or BE series, etc. But on SME platform, what we have done, we have infused the two series, that is the SM series and the ST series. So this company, when migrate from SME platform to the main board, they enter into the series either in the EQ or the B or whatever they're eligible for. So the reason why we have kept this series system, if the company is under SM or the ST, that means the minimum lot size will be of 1 lakh rupees and the trading will happen under the lot size. But once they migrate from SM series to the EQ series, now their lot size has been changed to 1 share. So even if the investor is holding 3,000 or whatever number of shares, he can, instead of selling off full lot, he will be selling 1 share or 2 share or whatever he is, whatever he likes to. So NSE has come out with the migration policy. So we didn't wanted company to access the main board has a backdoor entry, like they are listing on the SME platform and within 1 month or 2 months they are migrating on the main board. So what we have introduced with the criteria, where the basic criteria is your post issue paid up capital. Your paid up capital should be at least 10 crores. The market cap should be of 25 crores, and you should be on the NSE SME platform for at least 2 years. And there are certain hygiene conditions which are applicable to the companies and the promoter group. So if the company is fulfilling at least this 3 of the criteria, they are eligible to move ahead. So this is how we take care of, 1 second. So this is how the company lists on the NSE merge platform. So on the main board platform, we have usually seen we has an exchange. We get in touch with the company. We meet the promoter on the listing day. Once the IPO get closed, and on the day of listing, we are handshaking with the promoter. But on the SME side, it's totally a different ball game. So usually, as we have seen in the earlier screen, these SMEs are the family-owned businesses. So we have interacted with this SME company. So once since 2012, we have done at least 1,000 of events and reach out to more than 20-30,000 entrepreneurs, maybe more than that. And we have even done one-on-one meeting with all the promoters once the event get finished. So here what we have done, we have explained that boss, you have the new availability, how you can access to the equity capital market rather than taking the loans from banks or giving the private equity. Why not you should target the IPO side? On the IPO side, we are coming out with the opportunity. So in the initial days, it was like when we used to tell the company you have the opportunity to list the company. So they used to say us, "Ki boss, aap kya baat kar rahe ho? We are not that big if somebody will have an interest to invest in our company." But we have shown them the case studies. We have shown them how companies are reaching out to us and coming up with the IPO, and even the investor are ready to invest in the company. So once we interact with the company, we connect them to the merchant banker. So to bring any IPO in the country, you require the category 1 registered merchant banker with the regulator, that is SEBI. So we usually appoint them, connect them to the merchant banker who will analyze their business and what kind of funds can be raised, how they can arrange for the investor, and all that thing. Once the discussion is there over between the merchant banker and the company, they go ahead with the signing of the mandate and the preparation of the offer document. Once the offer document is prepared, it will be filed with the NSE team. So here, as a business development team, we are always connected to the company from the day they thought we want to go with the IPO, the day we spread the awareness about the platform. So once the filing is done at the NSE, but of course we have the another team who will be dealing on the offer document. That is our NSE listing compliance team. So they do the due diligence of the document, and if they have any observation or query, they get it clarified from the company. And even has a second step, like has a business development team, we usually visit to the promoter, visit to the factory, understand the business. But even compliance team does the site visit, surprise site visit. So they don't call up and go to the company. The moment they file the offer document, within few days they go and have a site visit for the company, maybe at the register office or maybe at the manufacturing unit, to just to understand is company ready with the queries whatever been raised by the investor, whatever has been raised by the investor, to go and check whether the company is working fine and is there any issue, whether they are known in their vicinity or not, in the same fashion. Once the compliance team is okayed and comfortable with it, they will issue the in principle approval. And as I said earlier, within 1 year of time, the company can bring up the IPO. Once the IPO gets over, so within 6 working days, the company will get listed on the platform. So here we also participate with the companies if required, if they want to be participate in the roadshow, which they do with the investor. But obvious as an exchange, we can't tell the investor to invest in the company. Yeah, but we can give the brief about the company and brief about the platform, how study it is and how it's been growing. So these are some value proposition for the issuer. Why should one think to get listed on the capital market? So it's the efficient way of raising capital. So we always see getting the equity capital is the cheapest source, but believe me, it's not the cheapest source. Though you are getting the interest free investment in the company, you are not liable to pay any interest to the investor. Otherwise, on the bank loan or the bank funding, you need to give some interest to the banks. Then only you can use the capital. But saying that it's you need to continuously deliver to the investor. You need to build that trust, so that when you want to go for the second round of raising capital, they are the one who are ready, because the mouth spreading done by the investor is the most important thing, along with the growth performance of the company. So it's an efficient way of raising the capital where the company is getting interest-free capital. They invest it in the company and show the growth performance to the community. Once the company gets listed on the platform, they get the higher visibility. So we always say, suppose one IT company getting listed on the platform, the moment we type IT companies in India or maybe some state, so there will be n number of registered IT companies. But the moment we type the IT company listed on the platform, on on either on the main board or the SME platform. So there might be a few n number of companies who have been got listed, might be 100, might be 50, might be 10, 20, whatever sector they belongs to. So it's easy for the investor community, for the business community who wants to do the business or looking forward to do the business either in India or co-jointly working with some co-jointly to be worked with some on particular project. So it's easy for them to have a glance at the company, and like all the track record of the company, the financial data, the growth performance of the company is in the public domain. So they have the confidence, was this company is doing a great show. So why not to have a tie-up with them? And even investor thinks if when the company is doing so good and raising year on year, so why not to do some investment and create the wealth for themselves? So it's along with the higher visibility, it's adds on to the credibility in the bankers, to the clients, to the debtors, or to anybody with whom they are dealing. So even here we have seen few of the companies, once they get listed on the platform, they have got the benefit in the range of 0.25 to 0.75 BPS point on the interest loan which they were paying to the banks. They get the appropriate valuation. So once the company get listed on the platform based on their corporate governance, based on their growth requirement, the investor gives them the proper appropriate value, which has been seen on the market sides. the corporate governance norms has with some relaxation given, they are seen as the mainboard platform. The criteria of migration to mainboard that we have already discussed in detail. So it's give the liquidity. So basically what we are trying to do, the piece of paper, which is called a shared certificate in a private limited company, we are giving them we are creating a new alternate asset in the form of equity shares, which are now been tradable in the market. So in a private limited company, you will not be able to pledge the share as a collateral or give it as a collateral and raise money on that. But once the company get listed, it can be used as various terms and tools, like it can be placed as a collateral with the bank to borrow money. It can be pledged to raise more and more money. The opportunity for merger and acquisition improves. So once the company are listed, they may get merged with the bigger companies or may start acquiring the new small companies and go big. uh, they uh, they try to impact the company, try to impact the employee by giving them the ESOP value. So if the company, again on the private side, even the ESOPs are being given to the employees, they don't know what valuation they are holding in the company. But the moment the company get listed on the platform, they know what ESOPs they are holding, what worth it is, and it becomes the add-on advantage to try not to employee should not leave the company. So it is a tool to take the to have a employee continuous working for the company. So these are the few value proposition what we have seen on the intermediary side. So what we have realized when we are speaking to the SMEs, they are usually being advised either by the chartered accountants or the company secretary or few consultants who understand the finance and give the appropriate valuation. So we realize, and we have done many seminars, webinars with all of them across. So whenever we meet the company, they say, boss, you speak to our chartered accountant. We speak to the chartered accountant. He says, yes, boss, this company is interested to go on the IPO side. So that's various value proposition which has been for the intermediaries. They can give the IPO consultancy services to the companies. They can give them the corporate governance services to them. Even what we have seen, the intermediaries do have various portfolios. So they, on the one hand, they have the companies who is in required of the funds, and the other hand, there are the promoters or the entrepreneurs or the investor who are searching for the companies where the business is on the growing stage and they want to invest in the company. So like intermediary helps to get merged or get married with investor with the company, and it's the win-win situation for all of them, even for the company, even for the intermediaries, and even for the investor who are looking for the investment. So we always urge to the intermediaries like chartered accountant, company secretary, financial consultants, and all of them. He just add on to your portfolio when you are giving the guidance to the company on the various ways of financing, how to raise finance from the market. Just to add on, they have one more criteria, one more platform where now they can get list on the platform and raise money from there. So as an NSC initiative, we have done various awareness sessions with professional bodies like ICA and ICSI. We have visited to tier 2, tier 3 industrial to MIDC's area or GIDC's areas of that particular state, particular city. We have done various events with them just to spread the awareness. You have one more opportunity where you can eye and raise money from the market and get listed on the platform. We have done some tie-up with government bodies. We are tying up with the state government bodies, with the MSME department to spread awareness about the platform in the local DIC's area which they are into. And few of the state government has also given subsidies to the company if they are getting listed on the platform. on the issue expense side. So that is there around 7 or 8 states have given that subsidy provisions to the company who are getting listed up there on this platform. Even in the recent speech given by the MSME minister, they have allocated few funds which will government fund which will be investing in the companies who are coming on this platform. So yeah, the development is on, but we have not come up. We have not heard any specific guideline on that. But yeah, we are waiting for that. So this is the thematical interest index which we have introduced in November on November 20th, 2017. So it's just the view index. It's not been tradable. The main reason why we have not introduced on the trading side is like when the company is migrating from SME platform to the main board, immediately but obviously there is the change in this index valuation. So currently we have kept it only as a view index and not on the tradable side. So just to give you the brief, at NSE corporate office, Rachna is heading the team along with them. I'm traveling with her and guiding the companies. Plus, we have 5 regional offices where one person has been deputed to look after the SME platform. So wherever you are on the Pan India side, we are ready to come, ready to travel, and make you understand how you can have an advantage with the company. And even we have seen when we are doing the events with the corporates, so corporates are not very open up to share their problems or how much fund or how what business plan they want to enter into. So we also do one-on-one meetings with them, make them understand and how this platform can be beneficial to them. Even we have come across such cases, the company with the turnover of 5 crore or 2 crore or 3 crore are eyeing to get list on the platform. But we make them understand because this might not be a right time to enter into the capital market to dilute your 25% stake at a lower valuation. So we also suggested them to grow to a certain level and then IN come on the platform so that you at least get the basic valuation with the from the investor community. So that's it from my side, Shalini. So if any question had come up, I'm ready to.
Wonderful presentation, Jayesh. Firstly, before I go into the details, I'd like to thank you very much for jumping in absolutely in the last minute and really putting together an excellent, insightful presentation for the participants. I'm sure there is a lot that they have learned today in terms of what really happens at NSE, what is NSE's perspective to the whole journey of an SME, getting themselves listed, also the kind of support that you all are right now giving, going out there into the market, talking to entrepreneurs and really helping them in this journey is truly, truly remarkable. So, great work being done by you, your team, all of you out there. I'll start picking up questions as they're coming up. The first one that I see out here is, from Sankalp, which is there any turnover size for the company to become eligible to consider a listing on NSE Emerge, other than, being in operations for 3 years? So
No, so Sankalp, as I've told in my slide, we have kept the basic criteria, that is 3-year operational history with operational revenue and positive net worth. That's nothing on the turnover size, but like I've just informed you, if we always look at the from the perspective whether the company should go and get list on the platform at the current stage or not. So we looking at the balance sheet of the company and what will be a right time, we always guide to the company. So as such, there's no criteria on the turnover size. But yeah, coming to the investor point of view, they always look at the company on the growing path. So at least they should know what kind of earnings are being made by the company before they make up their mind to invest in the company.
I think that's heartening news, definitely from a regulation perspective. If there's no, restriction on the turnover, then it definitely becomes, a lot meaningful. But yes, at what stage the company or promoter should get in touch with NSE to go about this is definitely a business call, more than NSE's call or a regulator.
So you can get in touch with us anytime. We will do one-on-one meeting with you and make you explain about the platform. And once you see, boss, this is the right time to enter into the equity market, then we can take it forward.
Great. Another question that's come up to us is, the steps of listing that you had mentioned on one slide.
Yes.
What's the usual time frame for one to go through, from the start to the listing?
Yes. So basically, it will be really tough to comment on what's the timeline taken. So in our experience of this 8 to 9 years of starting the platform, the major time is taken by the entrepreneur is on the decision to make up their mind to go on the public side. Because once we meet the promoter and talk about 25% dilution and all, so he always says, "Ki, boss, I'm doing the business, I'm running the show. Why should I give my profit away to the 25% investor?" But we have to prepare our mind. Once the mind is prepared and all the documents are in place, so fastest listed company was about 2 months. So once the promoter has made up the mind, within 2 months they have filed the offer document, and once we have issued the in principle approval, so exchange will take around 2 to 3 weeks of time to issue the in principle approval. Once you get the in principle approval, you can come in the market anytime once the company is ready on the investors.
Great, thanks for the answer to that one. I think another question is, what is the rough cost for listing on NSE Emerge?
So basically, that's really we have come across this question to in all the events. But on the exchange perspective, like we are charging near about 1 lakh rupees put all together. So like it's 25,000 for the processing fees, 25,000 for the initial listing fees, and 10 to 45,000 depending upon the paid up capital. That will be the annual listing fees. And over and above that, the ASBA charges will be there, which will be either 2 lakhs or 3 lakhs, depending upon the IPO size. But coming on the intermediary side, right, there are various agencies involved at the time of the IPO, like the merchant banker, the peer review auditor, the registrar and transfer agent. Put all together what we have seen on our experience on what has been written in the offer documents, in the range of 25 to 40 lakhs. That's the approx cost which comes across. So here, what merchant banker have done, they have bifurcated the cost into the two parts. The one part is for the preparation of the offer document, and the another part is on the raising of the fund. So we have come across many entrepreneurs, like just to name a few, like Tejo Engineering, uh, Beto Switchgear. When we this were the initial days when this company came for the IPO. So what we have seen when the company is coming out with the IPO, we always tell them to introduce this IPO formalities to their dealer, to their partners, because they are the one who might be your primary investor in the company, because they deal with you day in day out. They understand how the management is, they understand how the business has been grown by the company, so they are ready to invest in the company. So in few of the cases we have seen the dealer has subscribed to all the IPO, and there was no need of the merchant banker to raise funds from the market. So they've got benefit of not paying that particular amount of cost to the intermediary. So whether the IPO is of 5 crore, 10 crore or 50 crore or 100 crore, the offer document remains the same. So what they have told, we will be charging so much amount for preparation of offer document, and on the fundraising cost, whatever they are raising from the market, they will be charging some percentage attached to that. And as a percentage cost, we will not be in a position to tell you, guide you. But yes, it's basically on the negotiation side what has been done. between the entrepreneur and the intermediary.
Thanks for that answer, Jayesh. I think that was very useful for people to understand in terms of overall, how it could look like in term, for panning it out as a journey. So if somebody's preparing to list at one point of time in their growth journey, then what they need to gear up in terms of the network they build, in terms of the associations, the cost, and also in terms of business readiness. So that's the mindset that you spoke about, the willingness to share of the profit, willingness to grow together by the intervention of an investor. So that's a whole lot it takes. Also, in terms of transparency, it'll lead to, when it comes to publishing your data more transparently, openly to shareholders and to regulators and public in general. So all of this is a certain preparatory journey for organizations. So
just to add on here, Shalini, I missed on this point. So whenever we are meeting to the entrepreneurs, they were like कि boss मैं मेरा financial data दूसरे को क्यों दिखाऊं, मेरे competitor को पता चल जाएगा कि I am doing the business of so and so, I am making the profit of so and so. So in the initial day, we come across many of the companies coming with the same kind of question and the threat which they were like, why should I provide my data? So then what we started doing, we have taken out their balance sheet from the MCA portal and everything. And then we used to sit with the company, boss, you don't tell me what you are. I will tell you what kind of business you are doing and how much you are earning, whatever you are showing it in the balance sheet. So they were like, boss, aapko kahan se mila? So we were like, sir, in 1,500 rupees, you can get your balance sheet from the MCA portal. So now your all documents are being public only. That's no threat of you. One of the hindrance will be my data will be in the public market. Yes, but of course, when we are giving them the information on the business side, like if you are a manufacturing unit and you are doing some patents or something like that, you need not give the details of your process in the even in the offer document. It's only you can say we have the register patent for so and so, but the formulation and all that thing need not be disclosed to anybody. So be rest assured. And one of the point also what we come across is like once I go in the market, anybody can take over my company from the market. So sir, like from whenever the security market have been in this country, we have not seen, I guess, not more than 2 or 3 takeover happenings across. So be rest assured, the takeover regulations are so stringent that nobody can just come and take over your company.
Right. Thank you very much for clarifying some of the common myths that exists in SME space, especially when it comes to transparency and also when it comes to listing on the exchange. So with that, I think we've run past our time for today's session. I'd really like to thank you very much, Jayesh, for a very, very informative, insightful, and guiding sort of session that you have put together. All the slides and the whole interactive part of explaining to SMEs in the language that they understand. So thank you very much for that, Jayesh. Thanks for your time, and thanks to the entire NSC team behind, along with Rachna, for this whole session.
Thanks a lot.
So participants, with that, we're coming to the close of our session, and a couple of questions I want to bounce off to you, as much as you have been bouncing off to people. One is how ready are you and geared up are you for growth in the new normal? All that you've heard about the new financing opportunities, finance opportunities that are available, the way the whole business environment is moving to being more transparent and data driven, and how your information of what you are doing is out there for people to see and watch, and how responsibly you're going to be doing that. With all this in mind, and dreams of an IPO at some point of time in your lifetime, how geared up are you for all of this? So if you're really looking for help in terms of frameworks, tools, mentors, to guide you on this journey, then you must register yourself for the MSME Business Growth Revival Accelerator Program. And the link is coming to you repeatedly on the chat box. Please make use of that. And as conclusion to today's session, I would like to say that, end of the day, we have to accept the new normal of what COVID has left behind all of us with, be it in terms of how we operate in business, the way we access our customers more digitally, the way we process our data more transparently, the way we, are more visible in the real life, being with digital presence of our operations itself, of our connections, and how we need to collaborate in the overall ecosystem to be able to survive and grow in future. Some of all these lessons have come across in the new normal, and as business enterprises we all have to definitely prepare ourselves into surviving and actually growing in this new normal, which means that we are talking of gearing up our businesses in a different framework. And therefore, the first point that we began with today's session on the business resilience. So before another pandemic hits us or another global crisis comes and stands in front of us, are we ready to survive the next one? Is your business resilience built in? One, financially, and two, strategically in terms of operations. So from both perspectives, there is a lot that business owners need to be doing at this point of time. With so much of impetus coming to MSMEs, we need to leverage all of that and make the best of the current situation. So on that note, I would like to wish all of you a good success on your individual journeys, and we hope you've made the best of today's sessions. Thank you very much for participating and being with us. Thanks a lot to all of you. Bye-bye.